I think this is all part of the conversation where Canada is lacking competition in banking. It's an example of where, with more competition, I think more options for small business become available and we can be more successful as a country.
Hello, I'm Giles Gherson, and this is Toronto Talks, the voice of Toronto's business community. What are we talking about? Each episode is a conversation with top business leaders about how they're shaping growth, driving competitiveness, and building up our economy. It's about what they believe it will take to make sure the Toronto region remains one of the world's great global cities. Here's today's conversation. Wellington, great to have you here on Toronto Talks podcast. Great to get the opportunity to really talk a bit about Vancity. You think if you know Vancouver, you know Vancity. No one's under any illusions of what you've done there and how large a presence you have in the West Coast. And I think through the Western Canada in general, but you're a relative newcomer to the Toronto market, the GTA market. But you've been here a while. Like you've been growing quietly, I think is fair to say. And I kind of feel this year was your coming out party.
Yeah,
you're kind of making a bigger presence here, and I think it's just worth for our listeners to understand, what your presence is here. What are you doing exactly? This is the second biggest financial services sector hub in North America, and here you are from the West Coast and you're making a splash. So how? Why?
Right on, Giles. And so thank you for having me on your show, and I'm very grateful to be here. But you're totally right. Like, we are the largest financial institution headquartered in British Columbia. And British Columbia isn't on that list, I think, of top 2 cities where financial institutions exist.
Yeah.
But we happen to also own a bank that is headquartered right here in Toronto. And that bank would have gone...
Investment bank.
Vancity Community Investment Bank, that's right. And that bank used to go under previous brands like Citizens Bank, actually. It's been around since 1903, if you can believe it. Vancity itself was founded 80 years ago. So, I mean, we're a little bit younger 40s. Than the bank that we actually own. Yeah. But all said, Vancity has done very, very well in British Columbia historically. We've built a great presence. I think we've really built a very differentiated brand because we lead with impact. And we had established Vancity Community Investment Bank quite a few years ago now to start working some very niche but very important, impactful spaces. And we've arrived at a point where we think Canada needs more Vancity. And we're actually developing a very ambitious strategy to expand nationally, and it starts here.
Does it start with the Community Investment Bank, or does it start with Vancity? You've got these two tightly tied together organizations, but which one are you leading with here? Is it the Vancity Community Investment Bank, or is it Vancity Savings?
Really great question. So Vancity Community Investment Bank is the name of our bank as it exists today. But Vancity is actually a group of a lot of companies. It's not just one company. We have a credit union. We have an investment management firm. We have an insurance company. We have a bundle of these companies that all operate under one vision of Vancity. I do think we're thinking very differently around how we promote ourselves in the near term. We're putting that work in right now. We do a lot of really interesting, I would say, very niched but very important work here, largely in the GTA, but actually we do deals across the country.
Okay, so that's interesting because when you think about, again, this is a very large financial services market. Sure. Vancity would strike people as being, I wonder what they're doing here. There are lots of British Columbians in the Toronto region.
That's true too.
Former British Columbians, maybe people who tend to go back later for their retirement years, but certainly they're familiar. There would be a group of, call them expats, who would be very familiar with Vancity and probably very comfortable to bank with you. And so is that your kind of core base?
That's part of it. I think that's part of it. Like so we've done some research on this over the course of the past year or so, and actually in getting to the decision that there is a place for, I would say, an organization like Vancity to really come up the middle. We don't have a lot of middle-sized financial institutions anymore. They've largely fallen away. I know here in the GTA, like the big 5 or big 6 really take up, they have a huge presence. So for sure, I totally get the notion of like, what would a small bank be doing here? But Vancity is a very different organization. Recent research we've done suggests 1 in 4 people here in Ontario know of Vancity and they know about our commitment to values, things like climate, things like equity. Like, these are issues that are important to lots of people. Lots of folks don't think a lot of the banks really live up to these principles. And Vancity really does differentiate based on its sheer firm commitment to these ideals. And as a result, we know there's lots of folks who would choose a financial institution like Vancity if they were given a choice. Thus, that's the thesis behind it.
It's kind of a credit union philosophy, isn't it? I mean, when I think of how credit unions operate and have operated in Canada, they've always had a fair bit of social purpose.
For sure.
Right? A community interest and social purpose. And that's how they differentiate themselves from, the larger financial institutions. And they found strong niches and have. But you're not really a credit union. Well, I think you were originally, though.
Well, we are. Like, our largest operations today still are our credit union operations. But we are thinking about the bank. It's the same vision. It's the same dream.
Philosophy.
The same philosophy. Yeah. What we are really just talking about is what banking licenses we use to bring our services to market. And we are looking at our Schedule I banking license that we own in this bank headquartered here, around how we do scale that nationally. And it's kind of fun. Like, there aren't a lot of banking institutions in Canada when you really think about it.
No. Sometimes people would say, you got a very stable financial banking system here because you've got relatively few players that have large market share. We weathered the financial crisis in 2008 very well by international standards. Now, there may be another side to that story, but certainly from a stability, macro stability perspective, the system has kind of served us well. But then there are these opportunities for other players to come in, and you're taking advantage of that now. Foreign banks were coming in at a certain time. HSBC was here for quite a while.
Yeah.
And then, of course, just recently bought by RBC. But there have been others over time that have come here, thought they had a really good niche, and then, they would either get acquired by somebody else or something. But here you are. Talk a little bit about then how you activate that sort of philosophy here in Ontario, where you're saying, we have a sort of a social purpose approach. It's obviously you've got a strong financial approach, but tied to that, a social purpose.
Yeah.
And now you're trying to look for the opportunities in this fairly large market. What are they exactly? Like, what would you identify as being your prime opportunities here?
Well, I'd say with our existing offering, I would say it's like we have been involved in lots of clean energy projects here. We've been involved in lots of, I would say, affordable housing projects, cooperative housing projects, land trusts.
So people are familiar with the land trust concept. Maybe talk a bit about that. I know that's something you're quite interested in.
Sure. There's a lot of community associations, religious associations, and so on, who have accumulated land, municipal organizations even, and often it's about supporting them in finding ways to develop that land. They're not professional developers. They don't have a development company that is necessarily available to help them develop it, but it's how we can put those lands to use to create more affordable housing or other, I would say, social benefit that hasn't always been made available. And this is, I think, all part of the many, many different conversations that are happening right now around affordable housing. Like, we need a lot of solutions to cure the patient, which is in Canada's unaffordable housing climate.
In these markets, it's always about capacity to pay, right? You've got if you're gonna lend someone money, you supply credit, you want to make sure that they can return, that they pay the interest and ultimately return the capital. And so you've got a risk. Is your risk matrix very different than from other financial institutions?
We are still a for-profit organization, just like other banks. Yeah. But I think one of the interesting elements of Canada is, given sort of the oligopoly that has been built out in our financial services sector, is we have literally the most profitable banking sector in the world. Like, take all of the countries who are members of the United Nations and stack rank them by profitability in financial services, and Canada lands on top. And the reason for that is we don't have a very competitive market in Canada. We know we're roughly 1/6 the competitive intensity of the U.S., 1/3 of Europe, Australia, UK. And that lack of competition does mean there are markets that just aren't served well. And our research suggests that there's many markets that in Canada that are primed for disruption because They just haven't really hit the radar of the large banks. Now, and this isn't a critique of the large banks. They're well-run financial institutions. There's a lot Canada should be proud about those organizations. But the end with that is they're large, well-run organizations who don't necessarily see the smaller opportunities in the marketplace where people are being.
They use scale. I mean, they generally
100%
scale,
right?
They take very large risks often and need significant returns to justify that, and they need scale. So, but it is interesting. I would say that you look at the large financial institutions. Most of them are members of the Toronto Region Board of Trade, as you are now. So we're thrilled that you joined. But I would say there's a certain amount of frustration on their part too with. I think they feel they're somewhat constrained by regulatory requirements, by certain tax measures that have been taken in recent years. That's actually prevented them, in some ways, from lending to, say, small business the way they might like to. But again, you've got a separate set of regulatory constraints, I imagine, as well. So while we're on that subject, are there certain regulatory changes that you would like to see that would enable Vancity to play a larger role? Say in Ontario and the rest of the country?
Yeah, 100%. We were very encouraged by the recent budget that had several pages dedicated to the idea that we need to bring more competition to the banking sector, and we do think we need more competition. Obviously for Vancity, there's a little bit of a self-focused desire there, but we think it's good for Canada to have more options in market.
But the irony in what you just said is that obviously, you wouldn't want a large Canadian bank to fail. There'd be probably a run on the dollar. It would be catastrophic, most likely. I mean, that's a judgment, but I think there's a strong likelihood of that.
Risk of banking failure can't be zero, because if your risk tolerance is zero, then
it's like any regulation.
You're never going to see any innovation. You're never going to see change. You're never going to see advancement. Like 80 years ago, this is hard to put in context, but because it's hard to even imagine this world. But 80 years ago, Vancity was the first financial institution in Canada to lend money to a woman without a male cosigner. And at the time, the regulators would have looked at that like, that's a really risky thing to do. And was it a risky thing to do? Of course it wasn't. Now it's just common sense. But at the time, that seemed, have you built your models around that? Have you, how many years have you tested your theories that women are trustworthy? I mean, that is an absurd thing to even say in 2025 or 2026.
You are a more modern financial institution,
probably.
But you've also had a number of firsts. I mean, that's an interesting one because it speaks to the changing of an old moral code that was outdated, that a lot of people were still hewing to, and you broke the code and said we're going to do it differently, which is great.
I mean, I can go on about a lot of
interest savings.
We were the first to offer daily interest savings. Absolutely. I would say that's not perfect.
That's about innovation, I guess, but it's interesting.
I think that's the main point here. And today, what do we know? Canada's less progressive around how we bank newcomers to this country than many other countries are.
Really?
For young folks to obtain a credit history, Canada's a more difficult climate to get a credit, to build your credit history in this country than it is for young folks in many other countries in Europe and even the U.S.
What would be one of the requirements? What would be some of the requirements?
I think it's more difficult. You can get that first credit card, but we're it's a tighter limit. It's definitely much more constrained. You move to Canada as a doctor from another country with a great credit history of where you're coming from, yet you'll still only get a $2,000 credit card probably, or something like that.
Can you break that?
I think there's a lot of room to start breaking that. And that's exactly what we're really digging into now, around how, when we talk about markets that are primed for disruption, those are just a couple of good examples, but that's just scratching the surface. There's many. And I think our existing business kind of proves it out now. We do a lot of affordable housing projects for cooperative housing, for example, et cetera. But we're in a size of the market where the big banks might be just not paying attention to it. Yet small banks, there aren't very many small banks that actually have the capacity or capital to do it in a meaningful way. There's lots of underserved markets, truly.
Well, I mean, I think that almost has to be true. Right?
Yeah.
I mean, think of the U.S. banking system. As it grew up over time, regional banks, for example.
Yes.
With the Glass-Steagall Act, which was only really removed about 20 or 30 years ago. But for most of American history, you basically had regional banks that grew up in their communities, and they were very much local, and they were only allowed to be local. So they had to be innovative if they were going to capture, a large share of their market. And so sometimes I think we don't look, I hate to say this, but we don't look south enough to see what are the innovations that are taking place in a probably more competitive market. It's a much larger market that we can take advantage of here. And, I would assume that organizations like Vancity would be best place to do that? Kind of dip the toe in the water and see whether those things.
Giles, I totally agree with you. Like, we're almost, in my view, we're the perfect size organization. We're big enough that we have the capital and the means, the technology, the expertise to actually do meaningful things, to actually be disruptive and to drive change. At the same time, we're small enough that we can still be nimble and agile. Like, again, the large Canadian banks are well run, but they're large. You want to drive change through those organizations. You're convincing 100,000 people or more to change the way they work, or to absorb new change or new policies, whatever the case might be. And I do agree with you in the U.S. There's a lot of innovation. There's around 5,400 banks in the U.S., plus another 2,500 credit unions. You're going to see interesting things. Just recently, I visited a bank in Florida called Climate First Bank. It only started in 2021.
Wow.
Very unique niche in financing, like solar panels on homes, literally helping people reduce their carbon footprint at the same time, also dramatically reducing their electricity usage at a time AI is sucking up electricity in the U.S. So very popular. They're a $4 or $5 billion bank today.
And they've seen a niche that they can really exploit. They understand it really, really well.
They understand it really well, and they've been able to exploit it and grow. And they're also offering full services at the same time. They still offer residential mortgages and other things. And I think it's a great example of like the kind of innovation we don't see in Canada. Like Canada, for the first time in quite a few years, issued a new banking license this year. I think that's good for Canada to see more bank licenses be issued. We do need more competition. There's only roughly 30-ish Schedule I banks in this country today.
Yeah, it's kind of ebbed and flowed over the years, but that's kind of where it's landed.
Exactly. Yeah.
And even you're a fairly significant size, as you point out.
Yes.
You're not a small organization. I think you're not that far in terms of capital behind, say, National Bank.
Well, it's a really good question. We're similar size to Laurentian Bank, which of course was announced last week that they're breaking up. But I'd say that's what's really, in my opinion, eye-opening. When I look up from where we sit at Vancity, we're again roughly $40 billion in assets under management. When I look up from where we sit, I see EQ Bank, I see National Bank. National Bank is somewhere in the neighborhood of, I think, $600 or $700 billion in assets. So I mean, that's quite a gap. And I think it's the middle of the market, which Canada is really, I think, suffering from not having a strong mid-sized banking market. That's where you would, in most markets, would find the differentiated banks, the niche, services, the deep expertise in certain spaces. In Canada, we have a lot of big banks that are very good at what they choose to be good at. But in Canada, I don't think we have very many very niche financial institutions. When I look at Vancity, which is a values-based financial institution, like we've made strong commitments to equity, climate, reconciliation, affordable housing, affordability, access. These are things that I think Canadians are longing for, and we think there's a big opportunity for us to start closing that gap between.
Well, you've been able to focus on these social goals and make money.
And that's the thing. So it's not, it's not charity.
No, so that's actually the great lesson in all of
it. And it's good business, right? Like I think it's a very, very good point. Like we know based on our surveys, 40 or 50% of the population would choose a financial institution with our values if you delivered strong banking services, which is exactly what we're working to design right now as we expand national.
Now, one of the big issues both in Vancouver and in Toronto and in other large cities in Canada is housing crisis. There's been a lot of talk. The housing crisis lasted a long time. And, I think the tragedy of it is that governments at all levels have been really devoting a lot of thought and effort to trying to close that housing gap, but it's only gotten wider.
Yeah.
And you look at financial institutions, and I think the banks are trying hard to kind of do their best on this. But along comes Vancity. What can you offer, say, the housing market? You talked a bit about the land trust, but what are some of the other elements to the housing crisis solution that you think you can bring to the table?
It's a really good question, and I think it is about innovation. Like I think in Canada we have commoditized mortgages to a certain extent. We have sort of these cookie cutter approaches around how we provide financing for homes, and we have to get out of that way of thinking sometimes. And I'll give you an example just recently. So in British Columbia, where our credit union is headquartered, the provincial government changed the regs, basically forcing municipalities to take properties that were previously zoned for single unit homes or basically larger properties with one or two units on it to be a potential for expansion into a multi-res. And that's great. And a lot of financial institutions would finance those types of projects. But typically what you would see is developers would come in, buy the properties, knock down the old home, build a new one, and they do this.
But a larger one, basically.
But what you do find in cities like Vancouver, and I believe here in Toronto, are a lot of folks who are perhaps have been in their home for 30 years. They don't want to leave their home. A lot of their equity is in that home, their wealth. And yet there's an opportunity to bring several more families to the community. And modernize their home, which has often been dated and so on. And so we created a product that is actually a residential mortgage product that is for regular citizens and made available to them to develop their properties. And this has gone off. We just launched this product 2 months ago to high demand. Like we've funded over $40 million in mortgages in just 2 months, and we're just getting started.
So there was no other mortgage available.
Nothing
I wanted to turn my house into a multi-residential sort of complex, like split it into a fourplex, say, or something like that. I couldn't get a regular mortgage to do that.
Typically, you would be put through like a commercial real estate type of approach.
Because now I'm shifting from being a residential.
Right on. And so they would expect you to be able to bring certain capabilities to the table that most regular folks can't bring.
So what enables you to do that, though, in the sense of that sounds like higher risk?
We're testing it, and we're putting it in an envelope that we think makes sense. Yeah. But our experience, the way we're financing this, we know the market really, really well. We know the value of these properties very, very well. We know how to manage this kind of business very, very well. This is part of the expertise that Vancity's built over 80 years.
And we're seeing it, certainly in Toronto, with the ability to do fourplexes almost as of right now,
right,
which is really starting. You've got your laneway homes, which haven't been as successful in Toronto as Vancouver.
Yeah, it's gone over very well.
And I'm not entirely sure why. Why it's been slower here. I think there was a huge expectation that this would be a big deal.
Yeah,
but it hasn't been. Yeah. I don't know whether it's just maybe it's a financing issue. I don't know.
It could be. It could be. There's probably there's also cultural differences we recognize in Canada. Like probably folks in Vancouver are used to smaller homes than maybe folks that traditionally have been here in Southern Ontario. But yeah, that's a great point. But I do think financial institutions like Vancity, when we push the edges, others pay attention. Like the flattery in this case would be other banks taking this on and doing it as well.
Right.
Like this would be good for Canada. Yeah. Like we don't mind being the R&D arm of banking, but we need more organizations doing it beyond just Vancity.
I think that makes sense. So you'll need a charge on that. In terms of want to get a little bit into small business lending.
Yeah,
that is,
I'd love to.
Certainly at a Board of Trade, that's something that we're quite concerned about, is access to capital for smaller and medium-sized enterprises. Not always easy. And in fact, we think one of our worries at the board is, we're not seeing enough smaller companies grow into medium-sized and large companies.
We agree with that.
And in fact, often if they're successful, they'll just be taken over by a foreign enterprise, and the IP leaves, and we lose a lot.
Yeah.
So tell me a bit about what you're doing on the small business lending front.
Yeah, it's one of the areas that we are really doubling down on, and for the very reasons you say. Like historically, it's usually small regional banks that play I'd say a bigger role in supporting small businesses and helping small businesses grow to become larger businesses. We know that's where wealth is created.
Because often you have no option but to serve your local market.
100%. And you usually know your local market best, right? Like it's very challenging for a financial institution that goes coast to coast to be specialized in every type of market that's possible. Obviously, fisheries in East Atlantic Canada, just to give some extreme examples, manufacturing here in Ontario, like you need to have some deep expertise. So regional banks typically, historically, have done very, very well there. But we don't have very many regional banks anymore, as we talked about, or I'd say middle-sized financial institutions that have the size to be sophisticated enough, the products and services that these businesses need to grow, and ultimately the commitment to put the capital up to make it happen that in a meaningful way. As a result, I do think it's a small piece of the bigger puzzle as to why Canada's productivity has been lagging. Canada, ultimately, 98 or 98.9% of our businesses are small businesses.
Yeah.
You cross the border at the 51st parallel, and all of a sudden it's about 85% are small business.
And they're larger small businesses.
They're larger small businesses.
We define a small business as 100 employees or fewer.
Right on.
In the U.S., it's 500 employees.
That's a really good point.
And we have I feel we have a lot of micro businesses here.
Yes.
And they may have great ideas and a great, concept for growth, but they often don't grow then. And I think that comes down to financing to some degree.
I think it's part of the puzzle. I think it's having the experts to support you. I used to look at your banker is sort of you're one of your trio of experts you rely on as a small business owner, right? You've got your lawyer, keeps you out of jail from getting yourself into trouble, your accountant that makes sure the finances make sense, and often your banker is your partner, thought partner around how you make good business decisions, like where the investments should go and what have you. If you don't have a strong partner, like nothing wrong with Google, but it's not going to give you the same advice as somebody who's helped finance dozens, if not hundreds of other businesses similar to yours. And there's something about that encouragement that comes, that is really important in growing your business. Now, I think it's more complex than just banking, to be clear, but Canada does have, I think this is all part of the conversation where Canada is lacking competition in banking. It's an example of where, with more competition, I think more options for small business become available, and we can be more successful as a country.
And hopefully they flourish. Last thing I want to talk a bit about is we can't have a conversation in this era without talking about AI.
Yeah,
and where AI is going. In fact, one of the things you should have mentioned was, the patterns that regional banks or banks that specialize in certain types of sectors, they understand the patterns of those sectors. AI is all about pattern recognition. So at what point do you think we're going to find that the banking sector, financial services sector, is really going to shift around fintech and automation? And whether that levels the playing field or doesn't, but what do you see looking out 5 years? How do you see sort of Vancity positioned in the world of generative AI, which will be much more widespread?
Yeah, for sure. So, there's a lot of societal challenges with AI, as we all know, that we've got to solve. Like, how are we going to generate enough electricity to produce it, the environmental consequences of that and everything else. But let's assume we can solve all that, and we're working on it. We're committed to AI. We believe it's part of the solution.
Toolkit you've got. Yep.
It's got to be. And I think, what we're doing at Vancity is we're starting to imagine what is the business model in the post-digital world. So beyond AI, in a world where banking actually is just a digital experience, where do bankers and those specialists that have deep financing expertise, financial expertise, how do we play? And I think it comes down to markets like small business, where the decisions you're making are as much emotional as they are about what is the best decision. And you can chat GPT your question on, should I buy this equipment or that equipment, or how should I finance my business? But often it's when you can't sleep at night, it's the person you want to pick up the phone and say, I'm not sleeping well because I feel uncomfortable about this. What do you think?
Yeah.
I think that's a big part of the
That's the relationship.
That is the relationship. Yeah. And I think there's a place for fintech. So there's a lot of people who will never want to talk to their banker ever, and that's totally cool. What I can tell you, whether it's small business or consumer banking, I can tell you how many members and customers I've met over the past couple years in my time at Vancity who say, the young woman who walked into a credit union branch after having walked into another financial institution office because her mother had just passed away and left her $150,000, and she was a young single mom who didn't know how to invest the money, and the bank basically said, you can put it in a GIC or you can self-direct your investments. And she said, I've never seen this kind of money before. I don't know how to invest it. Yeah. That conversation, 20 minutes of somebody's time, changed her life and helped her put her on a good path for her future and her child's future. These stories happen every day, every single day. And unfortunately, ChatGPT isn't going to fill that void. But I think it is ChatGPT or generative AI, actually, agentic AI, all these are really important ways we serve folks to bring a more efficient experience, to respect the time of our members and customers. But it's certainly, we think, just one part of the solution.
Adding layers to your existing.
100%.
That makes a lot of sense. I think that's all the time.
Giles, thank you. I've
enjoyed so much. That was a great conversation. I learned a lot.
Well, and I always enjoy any time I get with you, Giles.
Well, thank you so much.
Thank you.
Cheers. Thanks for listening to Toronto Talks, conversations with the leaders shaping the region's economy. Follow us wherever you get your podcasts.